Last night, I argued that the dramatic slowdown in the restaurant business in recent months was at least partially caused by people hunkering down at home to fret about the election. Sure, that's only one piece of the stay-at-home thesis, and there are plenty of other headwinds. Cheap groceries make home cooking less expensive. You can get all kinds of entertainment without ever leaving the house, and there's simply way too much competition within the restaurant space, especially among the chain restaurants. Throw in an additional problem on top of these, and it gets even harder. Consider the case of Chipotle, the once beloved chain with a stock that went into free fall a little over a year ago thanks to a series of widely publicized health scares. When Chipotle last reported on October 25th, the company earned just 27 cents a share. Wall Street was looking for $1.59, and its revenue also came in lighter than expected, falling nearly 15% year over year. Even worse, Chipotle's same-store sales declined by 21.9%. That sent the stock tumbling from 405 down to 360. It hasn't really recovered since then. However, given that the food safety issues that first occurred last October, well, Chipotle is going to start facing some what we call much easier comparisons going forward. As I have said many times, maybe a dozen times, it typically takes about 18 months for a restaurant chain to recover from this kind of health scare. And if that's the precedent and it holds, things should start to pick up for the next 5 months. Plus, if I'm right that worries about the election have been preventing people from eating out, it's possible the whole industry could get a boost going forward. So has Chipotle fallen to the point where we can start thinking about a bottom? Or do we need to be a little more cautious? Let's check in with Jack Hartung. He's the Chief Financial Officer of Chipotle Mexican Grill. Get a better sense of its company's prospects. Mr. Hartung, welcome back to Mad Money.
Hey, Jim. Thanks for having me.
All right, Jack, we have been saying that there's just been this kind of national ill will malaise going on, not unlike 1979 with Jimmy Carter, where people kind of didn't want to go out. They were hunkering down. Any chance to think that now that this election's over, it could just be a era of, let's say, better feeling?
You know, I hope so, Jim. I know there's been softness generally. We've faced our challenges throughout the year, but generally in the restaurant industry, there's been a softness. I think there's been a lot of distraction with the election, a lot of negativity with the election, a lot of just, concern about the election. And hopefully with that behind us, hopefully we can all go about our daily lives. And, hopefully that means a lot more dining out as well.
Now, Chipotle's always been pretty independent of Washington. You've always treated your employees in a different way. Never had to, this is not, you're not a minimum wage shop that's dependent on things like that. Does it impact you? Two houses, both the Senate and the House being Republican and the president. Is there any regulation, the kinds of things that we hear about in the regular news matter at all to you guys?
Probably not, Jim. I mean, anything that affects us, let's say it's on minimum wage or any kind of regulation, is going to affect not just us, it's going to affect every restaurant out there. And so we feel like as long as we do a great job with hiring the right people, train them to deliver an excellent experience and delight our guests when they come in, if things like minimum wage or other things that allow costs to creep in, we'll have the opportunity with our economic model, especially as we restore it after recovering from the events of last year, we'll have the ability to either absorb those into our model or to pass on some of the higher costs to our customers. So I think we're in the same boat as everyone else. And so I don't think there's really anything in particular that would affect us more than any other restaurant company.
Okay, hey, Jack, when I was looking at your last quarter, you put out the notes. I was trying to figure out, why did you make it so hard for yourself? You put out projections for 2017, 195 to 210 new restaurants, same-store sales growth in the high single digits, $10 diluted earnings per share. Why make it so difficult? I mean, it's been a tough time. It's really hard to forecast. You're spending all this money being sure you're number one in food safety. You have to retrain people. Why make it even tougher by putting out projections? Just make it so it's just actually, an additional strain on a great company.
Yeah, those are some stretch goals, Jim. But, two things that we heard from our investors. We kept in close contact with our investors throughout this past year. In fact, we just came from a couple weeks of meeting with all of our largest investors. And two things we heard over and over again is they didn't really have visibility into the trends, either the sales trends or the margin trends. And the other thing they asked is, what is the earnings power? What is the margin and the earnings power based on this sales level? I mean, everyone expects that. Or most people expect that we'll recover our sales. It's not a matter of if, but more, when, over what time frame. But we got this question about how can you give us better visibility, and what is the earnings potential in both margin and then in EPS, terms at these current sales levels. And so we put together an internal plan, and we decided that we felt confident enough that we can put a stake in the ground in terms of what we think we can do from a sales standpoint. And basically, Jim, the sales projection we put for next year, which is a high single digit, is a continuation of the recovery. And the recovery is happening at about a 1% per month range. We wish it was faster, but if we keep it on that range, we think we can hit that sales pattern. And we think, we haven't really focused on driving efficiencies in the restaurant this year. We've been focused on recovering and then delighting customers. The last thing we wanted to do was try to over-manage our food costs, overmanage our labor costs such that we would deliver a less than great experience. But now it's time for us to start to regain some of those efficiencies in those line items. We think that combined with normalizing of our promo costs, we've got a lot of discounts this year. And then we think we can do a better job in terms of negotiating our contracts and how we buy things like gloves and paper and things like that that don't affect the customer experience. We think with all that together, with our company rallied around driving those, those initiatives, we think we can deliver on the 20% margin and the $10 EPS. They're not going to be easy targets, but we thought we owed it to our shareholders to put something out there in terms of what we think we can deliver.
All right, Jack, one thing I am concerned about is I love look, we've been eating Chipotle the whole way. You know that. I just play with an open hand.
Glad to hear it.
And, I always love the fact that you guys are focused on trying to get the best tasting food and having it fresh. But now you got some rowdy shareholders. You got Bill Ackman in there. He bought a lot of stock. You've had to hire a banker to talk with him. I guess you have a standstill or something. I mean, these are the distractions that I don't want to see my Chipotle have. I mean, are you able to get past them? Are these rowdy shareholders okay, or do they want you to refranchise or do some financial thing that is not in your DNA?
Yeah, Jim, we've been in close contact with all of our shareholders, and including we've had productive dialogue with the Pershing Group as well. Everybody is on the same page in terms of wanting to restore Chipotle to our previous greatness. And what that means is recovering customers, recovering sales, and then recovering our industry-leading economic model. And that's true with the investors that have been with us for a long time, some newcomers who have come on and bought our stock at these low prices, including Pershing as well. I mean, the dialogue we've had so far with Pershing has talked about driving long-term shareholder value, talks about recovering the business model. And from what they've said so far, they believe that Chipotle is a special brand, and we're going through a tough time right now. And they want just like everyone else to see us recover our sales, recover our business. And if we do that, we're going to get back to our previous stock price and then add shareholder value from there. So from what we can tell so far, Jim, all of our shareholders are aligned. Nobody likes the pace that the recovery has happened. And I'm happy to hear you say it's more likely to take 18 months. But all of us wish, including us, wish that this was further along. But all of us are on the same page in terms of let's get the recovery underway, and if we do that, the stock will take care of itself.
Now, we had Greg Credo, and I usually don't like to talk about Taco Bell in the same breath. It's a different industry, okay? But they're taking out some of the preservatives. They're trying to get more fresh, natural, organic. Jack in the Box, Qdoba's done a little bit better. Do you have to worry about competitors that you had left in the dust because of this difficult time?
No, in fact, we love the fact that other restaurant companies are looking to sustain, or to buy more sustainably raised ingredients, more natural ingredients, and remove some of the artificial ingredients out of their food. We feel like we've been a pioneer in that. And we think the more customers are aware of what's in their food, the more they're aware of how their food is raised, how the ingredients are raised, and how they're cooked, the more discerning they're going to be. And the most discerning customers, the more they learn, we think they're going to come to Chipotle more often than ever. And so we applaud the fact that more and more customers are trying to follow our lead.
Do I have to be worried at all that the buyback is tapered off a bit here?
No, the way I would think about the buyback, Jim, is we used our balance sheet when the stock really inflected and pushed down after the events of last year. We used our very strong balance sheet, and we bought about $1 billion worth of stock from our balance sheet. Now we're using operating cash flow, and even though we're in a weakened state from our margins and earnings standpoint, we're still able to fund all of our openings with internal capital, and then have excess capital to buy our stock back. And so we're buying more based on operating capital right now. We'll be able to, as we restore the model and restore our margins, we'll have even greater excess free cash flow, and we'll be able to buy at an accelerated rate as well. So we'll continue to buy back stock, but it's going to be more based on excess operating cash flow. Excellent.
Look, I want to thank you. You guys never hid. You never decided, listen, I'm not going to talk about it the whole time. You've been very straightforward with our viewers, and we think Chipotle Mexican Grill will come back. Thank you so much, Jack Hartung, CFO of Chipotle Mexican Grill. Good to see you, sir.
Thank you, Jim.
It is bottoming, okay? But remember the time frame. We've traced it out many, many times. It is not ready to take off yet, in my opinion, but boy, it's good. Mad Money's back into the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.